The International Monetary Fund says the British referendum vote to leave the EU has depressed the world economic outlook. In a new report, the IMF has lowered its forecast for global growth to 3.1%, and its prediction for the UK economy is even more sharply downgraded to 1.3%. But as our economics editor Kamal Ahmed reports, the IMF did not forecast a recession in the UK, despite the strong warnings it gave before the referendum.
Nearly a month ago, and scenes of jubilation contrasted with scenes of despair as Britain voted to leave the European Union. The biggest worry, the economy. Britain left hanging on the end of the line as investors feared what might happen next. Today, a little less gloomy from Maurice Obstfeld, the chief economist of the IMF.
We saw financial markets fall out of bed, and you might have worried that that might have had knock-on effects, that some of them might have seized up, that markets could have become disorderly, and that didn't happen.
Before the referendum, Christine Lagarde, your managing director, said that there could be a recession in the UK. But you've now said that Britain will grow, yes, a significant downgrade, but will grow faster than Germany, faster than France, faster than Italy next year. Do you worry that some people might accuse you of scaremongering?
Well, I think losing more than a percentage point off of growth for the next 2 years is not a good thing. I think that's a pretty bad outcome.
Now, since the referendum, we have been able to follow two key economic indicators, sterling and the stock market. On the day of the vote, the pound hit $1.50 as the markets gambled the UK would vote to remain. But when the result became clear, we saw a massive drop down to $1.28 over fears of an economic slowdown in the UK. Since then, it's gone a little stronger, up to $1.31. Some political stability has returned, and the Bank of England has made it clear it will support the economy. Then there is the stock market. Let's take the FTSE 250 of leading UK companies, a pretty good barometer of the economy. Again, the FTSE 250 hit a 2016 high of 17,277 on the day of the vote. This was followed by a huge drop and quite a big amount of volatility as uncertainty gripped the markets. Since then, a recovery. Now it's back up to nearly 17,000 again. Many companies that export, for example, are helped by that weaker currency.
There's clarity about the politics and about policy. Also, financial markets have proved very resilient. The biggest danger is that we talk ourselves into a self-fulfilling downturn. But as long as we don't do that, then I think we should be confident about putting through this.
The effects of the vote on June the 23rd are still working through the economy. Whether it will be tears or some hearty cheers remains to be seen. Kamal Ahmed, BBC News.